So 2 seconds later, investment video. Okay. Over the last 5 days, I've pretty much kind of compulsively been looking into investing. Been very much looking into it. Pretty much since the day after, yeah, since Tuesday, over a week. What's the day today? Wednesday. So last Sunday I spoke to Elliot. So 10 days ago around, I spoke to Elliot about it. I guess I started looking into it Tuesday. And then pretty much since Tuesday or Wednesday, so for a week, every day I've been doing something. And today, finally, I basically I allocated all my assets. I weighted everything, and so originally I went from putting a bit of money into ETFs, and you can look into what these terms mean. I'm not going to spend ages explaining them, but I put some money into ETFs, like 50% or something, into some random ones, some high yield dividend ones, because I wanted to see some passive income. Yeah, I guess I don't have to do air quotes because it is really passive, so I could see some passive income. Put some money into the S&P 500, put some money into, I don't fucking know, some other, the FTSE 100, FTSE 250. Oh my god, wind's blowing midges into me. And then, yeah, just load into Zoom, like £400 into Zoom, which was a compulsive thing. It's the first order I did, and I saw it going up. £200 or so into Apple, and then into loads of other ones that I thought was reliable, mainly from what I saw from another guy on the internet's portfolio. I looked into them and whatever, spent about, I don't know, £1,000 or so, invested about £1,000 anyway. And then I did some research and I thought, okay, well, I want to be pretty much all ETF, but I want 25% into companies that I trust and believe will beat the market over the next 5 to 10 years. So I want to do some satellite portfolio, which is like 75% ETFs, long-term, index funds, and then 25% in just companies that would allow me to track companies and buy and sell and follow it and derive a bit of enjoyment out of it as I go along my journey. My investment journey. Wow. And then I looked into it more, and I was like, okay, well, I'm being a bit addicted here, and maybe it's best to just stick it all in the S&P 500, because over the course of decades or whatever, it's always outperformed like individual stocks. And I realized that yes, I definitely want to be in this for the long run, like 20 to 30 years at least, before I start withdrawing. So I do want to be in index funds because I have definitely the best chance of doing well. And then I looked into it more. Then I was like, diversification. I'm diverse. I'm in 500 of the biggest companies in the US market. And I was like, well, global diversification. Yes. And then because I'm in it long term, there's more risk reward for like emerging markets and smaller small cap stocks and value stocks, which are basically stocks which are seen as undervalued, I believe. And there's I think it's a PE ratio, price to earnings ratio, that works out if it's a value stock or not. Anyway, so I started looking into that, and then I've spent the last 2 or 3 days working out what ETFs I want to invest in, looking into the TER, the total expense ratios for each of them. Anyway, I finally did it today. I withdrew all my money, or I will be doing tonight when fair trade kicks into gear at midnight, and then it will complete all my sales, and then hopefully, and then tomorrow I'll withdraw all my money from fair trade, and then reinvest it into trading 212. Actually, the withdrawal from free trade into my bank, I believe, takes about 3 to 5 days. I believe free trade told me today when I invested a bit of my money that I already had just lying there. So anyway, what I'm doing now is I will be taking out, well, first of all, I'll be selling all my free trade shares, and I believe I make a small profit on that, like £10 from the whatever it is invested. And I've got like £2,000, £1,500 or £1,500, £2,000 invested, I think, actually, not £1,000, yeah, £2,000 invested. I'll make like a tenner on that, something like that. Then I'll withdraw it, put it into trading 212. I'm only putting it into trading 212 because there's no monthly ISA fee. In free trade, there's a £3 monthly fee for just keeping it in an ISA. Trading 212, although I believe it is less ethical because it uses CFD, which I don't know anything about, but I just know it's, I think apparently 80% of people, which I read, so fuck knows how accurate it is, but a lot of people, 80% it said, lose money on CFD trading, and that's how Trading 212 can sustain itself, through the money it makes through the CFD part of the app. Free trade doesn't have this option, so they make a lot of the money through ISA fees, for example. As I say, Trading 212 doesn't have this, so I'd rather be there just for that reason. Even though it's maybe less ethical, but I've overlooked that for the sake of being selfish and not paying that fee. I'll reinvest it. Also on Trading 212, you can create a pie, so you can put all your stocks or your funds into this pie. You put money in, and depending on the weighting that you've put in the pie for each fund, it will allocate that amount of money, and you can automatically invest. So you can link your bank account and it can pull money from it, or you can just chuck money in every so often and it will allocate it for you, which is what I'm going to do. Because I don't want to forget to turn auto invest off after I stop working, and then it's like, oh, you're overdrawn in your bank. Hey, if that's possible through the app. So the juicy stuff, the ETFs I'm investing in, so I've gone 30% for the FTAL, which is the, and I can remember fucking the weightings and probably the most of the ETFs off the top of my head. I probably remember them and say them here simply because of how much of this shit I've been doing recently. I read 2 books as well, Smarter Investing and Tim by some guy, and it's called like the Easy Path, the Simple Path to Wealth. Oh yeah, Smarter Investing is by Tim Hale, and the other one's called like the Simple Path to Wealth by some American dude. The Smarter Path to Wealth just says throw it all into VT Sachs, which is just like an American S&P thing, I think, or it might be all world, but it's not available to me in the UK, at least not through these apps. And then Tim Hale says basically diversify through basically what I'm doing now. So anyway, the weightings are 30%, is it FTAL? I think it's FTAL, which is a Vanguard ETF for North America. So sick. A Vanguard ETF for North America, so that includes America, United States and Canada. And this tracks, I believe, 665 or 666, the number of the, yeah, that's cringe, large and medium sized companies. And then I've got 5 or 10%, I think I've got 5% in the, I can't remember the ticker, but it's, I think it's an iShares, it's a UK all shares. It's an iShares, the name, like, you know, Vanguard is the name of the company, name of the, I don't know, index fund people, name of the corporation, I'll just call it. And it's like the UK all share, so basically everything or nearly everything on the London Stock Exchange. So that covers like the FTSE 100, 250, and then small cap stocks. It's got a high total expense ratio, but I think it's better for long-term growth because it's got greater risk. Better for a long-term investment strategy because it's got greater risk as it has small caps. And I've got 10% in the VERX, which is the Vanguard European largest companies, excluding the UK. I have 15% in EMIM, which is emerging markets. I have 10% in VVAL, which is Vanguard Value Shares, which is an active fund, so it's got even higher expense ratio of 0.22%, and that tracks value stocks and small and value stocks, I think. So basically the riskiest. So yeah, small cap stocks and value stocks, or yeah, highest potential for growth. I've got 10% in the world, I think it's WLDS, which is the World Small Cap Index, which is just global small caps, so not growth, but just small cap. And that is, oh no, sorry, emerging markets isn't small cap and fucking, what do you call it, growth. It's just for emerging markets. It's in the name. So these are smaller companies, smaller countries, or emerging countries, not smaller. I'm about to say, because China's on it, I believe, and you've got like South Korea, you've got like Taiwan, Brazil, places like that, India, I believe, and then I've got, yes, small cap WLDS. Then I've got I don't know what it is. It's a Vanguard Pacific excluding Japan. I think it's VJPX, so that might be the Japanese one. Yeah, I don't know. VPAX maybe. But anyway, it's the Pacific excluding Japan. I think it primarily consists of Australian companies. And then I've just got and that's like 5%. And I've got V Japan, which is 5%, so that's just Japanese stocks. And then the other ones like the World WLDS, the World Small Caps, is 10% as well. And emerging markets, as I said, I believe 15%. Anyway, cumulatively, that's 100% of my portfolio. And the main thing is, I think the reason I did so much research, and there's a great YouTube channel called Ben Felix. I watched quite a few of his videos. Even though I kind of had the idea at the beginning, I wanted to gain as much certainty as I could, which was kind of unnecessary and just potentially a large product of my compulsive behaviour, because I say it's unnecessary and a product of my compulsive behaviour primarily because I can just rejig the weights as I go. I can just sell some shares and reinvest them, or even better, so I don't have the intention of losing anything through transaction costs. When I get my next paycheck, I just don't invest into that one and invest into that one, so I shift the weightings around. But I didn't realise this at the time mostly, and also I was just pretty addicted to it, just trying to get something to distract myself away from my feeling of separateness and loneliness and isolation, as I discussed in my last video, even though this one might get uploaded first, but the other video from today, that's cool. Yeah, I feel better now after having talked. I feel better now. I feel a bit more energetic, I guess. My hay fever seems to have ceased, gone back into its latent state, ready to bite my ass tomorrow. I think that's it. So my investment strategy is to invest at the moment maybe up to 60% of my income. Maybe I'll increase it from £600 every 2 weeks, which is fortunately because I've got a good job in Australia. Even though I'm doing nothing now because I'm on furlough, I guess it's called. I can invest £600, which is 50% every 2 weeks, which is a good amount of money. It equates to £20 an hour. And then hereafter, so after Australia, I don't know how I'm going to make money. That's one of the potentially a big source of my anxiety at the moment and uncertainty, because I don't know where I'm going to fucking get money in the future. I don't know how I'm going to sustain myself. I don't want to be living with parents, and I also don't want to be continuing with this video talking about this thing, because this is a huge topic in itself, and I don't think it's necessary to talk about here, but that's not the point. Who cares if it's necessary? None of this is necessary. Life isn't necessary. Living isn't necessary. There you go. Fantastic. Anyway, I can touch on it a bit, I guess. I would like to make money when I get home. This long-term investing thing is something that genuinely interests me, because if I can invest, say on average, £10,000 to £15,000 every year over the next 20 years, if that's on average, I don't think that's unreasonable, because presumably as I grow older, I'll grow my income. Well, if I do that, within 15 years, given the markets go relatively well, I could have earned enough. If I get 10% a year, including inflation, which is super fucking, hopeful, optimistic. But if I could get something like that, I could invest 15 grand on average over the next 15 years, I could be retired before I'm 40, potentially. I don't know what the math is exactly, but I've done some numbers and that doesn't sound too far off, especially if I'm saving a lot and not spending a lot, which is the same. Well, it's not, but relatively it is. So yeah, that's that. I would like to save a lot. I would like to work. I'm more interested in money now, essentially, working for money, mainly because I just want to save it, invest it. I just want to invest it. which is funny. But yeah, I was thinking earlier about the idea of going back to this freelancing thing, web development, and continuing that, because I'd be like, well, you know, I could work my ass off, and I could make 30,000 a year doing this while being able to travel the world. And I thought about it, I was like, you know what, Luke, that's probably right, mate. Then I was thinking realistically, it probably wouldn't be right, because I don't think I can subject myself to doing something I don't genuinely enjoy and I'm passionate about, primarily for the sake of money. And then you think, well, long-term financial freedom, and at the moment, the way my life is, I'm too myopic and I'm too mentally unsound to be able to not relentlessly, but sustainably pursue something that my heart isn't in. And when I say my heart isn't in, I mean that when I'm doing it, I'm not enjoying it, and I'd rather be working outside or not earning money but writing and, yeah, doing something I genuinely enjoy. I don't know. I can't give you a succinct. That's a strange word to say for me. I can't give you a succinct explanation as to why, but what I do know is that when I tried it earlier this year, yes, maybe I was in a worse state, I was in a poor mental state, and I was doing it compulsively. Nevertheless, it was unsustainable and ended up not being enjoyable at all. Really, no, it was just a chore and tiresome, and I didn't really enjoy much of it at all. Yeah. If I was going to go back to it now and just say do it an hour a day, then I just don't think I'd be able to sustainably, and I think I'd end up not enjoying it. And I don't know, man. I don't think I want to be working in front of a screen. I don't know. If I'm working in front of a screen, it has to be like writing, and it has to be for myself. Because even when I'm writing a book, at the moment, it feels forced. Like I haven't revised Sailing Over Tidings Blue. I haven't revised that in a couple of weeks. It just feels there's a lot of resistance to it. You know, maybe I'm just a bit of an idealist in that I want a job that I can enjoy and not feel a load of resistance toward doing, and make a decent income, but I think it's possible. I don't know what else to say about that. Maybe I'll think about it and continue the video, but yeah, I'll quickly say, I don't know what the essence of it is, but there's definitely a difference between, like, when I go to work to mulch, when I'm, doing the job I'm under employment in now, the job in which I'm under employment now, sometimes I might be like, oh, I'm going to work, but when I never really feel that anyway. Sometimes I'm looking forward to work, actually, even when I'm in the morning cycling there, I look forward to it a bit. And when I'm working there, it feels fulfilling. I'm talking to people, I'm physically moving and having a laugh with people, I'm interacting. But when I'm forcing myself to write, I might do it for an hour or two, and then afterwards, I don't know, I don't really feel that fulfilled. I feel like, yes, I've done something productive, I can feel okay with myself, but it's not like I actually feel a genuine sense of satisfaction. And that might be just because I don't have much interaction in life at the moment, and I'm not having other fundamentals met, like just regular social interaction. So maybe if I was at college or university for the morning and I was having a laugh with people, then maybe I would be able to sit down and find genuine fulfillment from writing. But at the moment, that's not the case. And at the moment, my mindset is that when I go back to England, I'd much rather do something outside and physically laborious rather than trying to pursue something like software engineering, because I don't think I'll be in a very good mindset to do such when I'm at home, given the way I am now, assuming that this sustains itself, perpetuates. That's the end of the video. I've recorded a lot today, talked a lot of stuff, but I feel mentally more clear.